Alrighty, good morning. It is 11 a.m. and we want to welcome you to our second in the series of our webinars, Business Insight webinar. Alrighty, good morning. And as it is 11 a.m. and we want to welcome you to our second in the series of our webinars, Business Insight webinar. Alrighty. Sorry about that. Technology is fantastic when it works. and other times it can be a chore. But I hope all can hear us who are a part of this. And again, I want to thank you for joining us. I'm Sherman Jenkins. I am the chairman of the board of the Quad County African American Chamber of Commerce. And before, I think everybody heard that. So let me start again. Thank you for joining us today. I'm Sherman Jenkins, chairman of the board of the Quad County African American Chamber of Commerce, based in Aurora, Illinois. We hope you find this webinar informative and inspiring. And let me tell you a little bit about the Quad County African American Chamber of Commerce, for those of you who may not know. In February 1993, several African American business owners in Aurora, Illinois, began meeting to discuss ways to increase the number of African American businesses and help existing businesses. The decision was made to form a Chamber of Commerce that would focus on issues relevant to African American businesses and pave the way to an eventual partnering with other chambers that were in existence at that time. In the 28 years of the Chamber's existence, many African American businesses have been helped through workshops, seminars, grants, loans, and scholarships to African American high school and college students. The Chamber covers the counties of Kane, Kendall, DuPage, and Will, and continues to enhance the commercial environment and improve the marketing opportunities that result in high-performing, profitable African American businesses in the Quad Counties. Now, this morning in this webinar, we will be presenting our second topic in our Business Insight series. Ms. Lorena Lapastida, who serves as Vice President of Retail Banking and Branch Manager of Aurora Bank and Trust, a Wintrust community bank here in Aurora. She is going to be given the second as she did the first. And hopefully many of you were here for the first one where she discussed small business financial statements. Now, if you didn't get a chance to attend that one or participate in that Zoom, you can always go to the Chamber's website, www.quadcountyAAchamber.org, and you can view the webinar, the broadcast, because we do record these and you can go back and look at them later. So she did an outstanding job from there. And let me tell you a little bit more about her. Lorena is also a member of our board of directors of the Quad County African American Chamber. She earned her bachelor's degree in business administration and finance from the Universidad Panamericana in Guadalajara, Mexico. With over 20 years of experience, Lorena's experience is in banking and management. She has proven to be a great relationship builder as part of the strategies to achieve goals. Lorena's key strengths are to deliver superior financial results and best-in-class customer service that will create a proactive sales and service environment. In essence, y'all, she really works to help make things happen and make sure that you are successful in your business. She has been proactively involved in the Aurora community for the past 17 years. She also serves on the board of directors of the Aurora Regional Hispanic Chamber of Commerce, as well as working with the Small Business Development Center in Aurora. Now, in this webinar, How Business Obtain Credit, Ms. Lapastida will explain the concept of credit reporting and the impact of credit reports on the operation or growth of a small business. You will learn how to identify the credit reports and other reporting systems commonly used to assess the risk of extending credit to a small business. Now, before I turn it over to Lorena, I'm going to just remind you, if you have questions, feel free to put them into the chat, as well as, and I will read those off and she'll be able to see them. And then if you have even more detailed questions, we can arrange it where you can be able to, she'll have her contact information where you can be able to follow up with her. But again, don't be bashful. No question is dumb. No question is stupid. No question is whatever. It's a question. You want to know what the answer to that question, and she will be able to provide that to you. So I'm going to turn it over to Ms. Lorena Lapastida, the Wintrust Bank, Aurora Bank and Trust here in Aurora, for our second in the series of how business obtain credit through our Small Business Insight series. Take it away, Lorena.
Thank you. Thank you so much for having me. So as Chairman said, we're going to talk about how business obtain credit and what is a business credit. So many times as company owners, we will forget how to start building credit for your business because we're worried about how are we going to start our company, our sales, marketing. So it is important to take action. Business credit is not one of those things that you want to wait until the last minute when you need it. So your business may require to credit if you need to grow it, or if you need to take a loan to buy inventory with the other business that will sell you the inventory, or purchase office space. Maybe your business will need credit to buy like a software to help your business grow. So without business credit, it might be more challenging to get loans, and maybe you're going to have to pay more for them. Business credit is sometimes similar to personal credit, but it's a little bit different. Like personal credit, business credit is one way that the lenders, meaning the banks, will assess whether they should lend you the money, or also many other businesses will look at your business credit. So to see if they can borrow, or if you can pay those invoices on 30, 60, 90 days, that's credit, right? Where business credit is different and it's tracked and the scores are calculated is a little bit different. Different companies offer different versions of business credit score. We're gonna talk about business credit scores so you guys will understand. In some cases, it might be mixed with your personal credit, depending if you apply for the business loan, also if you apply as a guarantor. So it's important also your personal credit. That's why it's very crucial to understand how business credit works and how to start building the business credit. So how you're gonna start building your business credit? So the first thing, you will need to establish your company to start building credit. That means that you can do like a corporation, an LLC, but you need to build a structure for your business. Do not run your business as your person or like a personal account. So it's sometimes you can start as sole proprietorship and then change the structure, but it's important to establish your company. Second thing is you need to get an employer identification number for your business. You do this with the IRS. So it's like a social security but for a business. The EIN is the abbreviation for employer identification number. It's going to identify your business when you apply for business credit. And it also is going to be used to file tax returns. And also if you work with W-9s. Well, some companies may allow you to apply for credit using your social security. It's better to use the EIN because that's not going to help build your business credit. Always apply for business credit using your company's EIN. If you do this, it will help to start building credit for your business. Other business credit bureaus start credit with what it's called the Dun & Bradstreet report. Even if you don't get that Dun & Bradstreet report or number, eventually your business, they will assign that to your business. And that's how it will be tracked, your company, with the Dun & Bradstreet report. So that's one of the reporting agencies for business. So getting a number might speed the process, but if you don't get the number, eventually your business will be identified with that company. So the Dun & Bradstreet report, it's the credit score goes from 1 to 100. So with 100 being the best possible credit on a business, and the scores are divided in different risk categories. With 0 to 49 are high risk of your business paying late, and then from 50 to 79 it's like middle, and from 80 to 100 it's low risk. So when you apply for a loan, they will run that credit also. So once you establish your business, and then you got your EIN, and then you run the Dun & Bradstreet report, it's important as a small business just to get a line of credit. If you get a line of credit, it will help your business. Sometimes if you don't even need it, start with a small business line of credit so you can start building credit. So once you start with the business line of credit, it's good to use it and reuse it and pay it always in full. Do not use the whole line for your business, and if you don't pay it, then the bank is not going to be revolving, and then what's going to happen is that the bank is not going to extend you more credit when you need it. Also, there's other avenues with the financial institutions where you can, they have some accounts where you can start building credit. So it's like, those are like secure loans. So your business can apply for a secure loan. It will report to the Business Credit Bureau, but make sure you are paying that on time. So you need to be, as a business owner, I know you have sales, marketing, but the credit is very important, because when you want to expand is when you sometimes might need credit. Also, another way to build credit is with your vendors. Like if you buy inventory, you can make those purchases within 30, 60, 90 days. And if you pay them on time, they will report that to the credit bureaus. The Small Business Credit Report contains information provided by banks, lenders, and also investors and other business and government agencies. The credit report contains the worthiness of the credit, employment, what type of licenses you have, and then credit reporting agencies also collect information on bank accounts, payment histories, if you have any judgments or liens with your business, and unpaid lawsuits. So that's very important. When they check for a business credit, they will always check for liens, judgments, and lawsuits to see if your business was involved in some kind of litigation, or if you didn't pay a loan, then they will place a lien on your business. So it is very important. Another part of building credit is start a business bank account. there's many times where business owners will use their personal accounts as their business accounts. So always, always, always separate your business, the business assets from your personal, because some vendors will reach out to banks and see if your account is in good standing, if you have any overdrafts. And also in a bank, if you're going to your bank where you have your business account and you are applying for credit, they will always check if you were in the red, meaning negative, and paying a lot of overdraft fees. That means you're not getting enough income to repay the loan. So that's very important also. The credit reports are used or involved as a small business owner in 3 ways. As a business owner that you're seeking for credit, or if you're gonna buy supplies, they will review your credit history to see if they wanna grant you and on what credit terms. As a report user, you can also extend credit to your customers. As a reporter of information, your business also will submit credit information to accounts owed to your business. So when a customer pays their debts in a timely manner, or your business, those will be reported to the credit agencies. So that's how you can also build credit with your business. If you're buying supplies and if you're making your payments on time to your suppliers, that's reported to the credit agencies. So that's super, super important. Pay always on time. As you are getting started your business, you can use your personal credit. But like I say, however, establish credit with the reporting service in the name of your business is super important. You might be, when you apply for a business loan, sometimes as a person, you have to guarantee the loan. So it's also important to have your personal credit in good standing, because there's sometimes like a misconception that when you're the business owner and your business can have excellent credit, but you don't have good credit, they will look at the overall picture. Your business can have good credit, but if you as a person and you're guaranteeing the loan, you don't have good credit, a bank will not extend you credit. So the business credit reports compare the stability of business to other business participating in the same industry. So business involving extending credit to these reports can determine the financing. So when also they look to extend credit to a business, they will look at the overall picture on how the industry is making. Supplies and shipping companies can review your credit history for your business, and then they can decide to either grant you a line of credit or no. So all this business that participates in this reporting are more visible in the marketplace. So that means that if you're listed on this reporting agency, it will help you also as a marketing tool and to market your company through internet searches, that the link on the firm's name on your name. So it'll help you. So that's why it's important to start building credit for your business. So some people think that probably like the business credit is like the personal. It's a little bit different. So what has a business credit report? The business credit reports contains information like the risk. The commercial credit risk score is, it goes from 101 to 670. Where 101 for a business, it's that means is that they have the lowest probability of delinquency or being delinquent, paying their bills, where 670 represent businesses that they will pay their bills on time. So that's why, as a business owner, make sure that your business is paying everybody on time. Your loans, if you have a loan with a bank, the business, or with your vendors. Also, it has the potential for the business of failure indicators. If they were credit filings for secure property. So if sometimes when you apply for a commercial loan, the bank will place a lien probably on, if your business has a warehouse, they will put a lien. So if you don't pay, they will use that as a guarantee. Also, the business credit has the business ownership information. Who are the owners? Who owns the business? If that business has any other business or affiliates, and if there were any public records of security interest filings or collections. Each reporting agency usually provides free business credit report, or sometimes you will have to pay a fee for that. So what are the reporting agencies for a business? So the reporting agencies for a business are the Dun and Bradstreet report, Equifax for businesses, and Experian. So each one of these agencies have extensive information on their websites regarding their services. So if you reporting your transaction history with a consumer to a credit agency gives other creditors notice of debts that you owe to your business or your business owes. It allows other people to know how much debt you have, and then they will calculate the debt to income ratio from your business. And sometimes when they calculate the debt to income ratio, they will include your personal debt. Also, when they put credit on your business, they also pull the UCC lien, is the Uniform Commercial Code. So the abbreviation is the UCC. So when you apply, it is normal when you apply for a business loan for a bank to put UCC on all your business assets. That's super normal, because if your business doesn't pay, then they will have to use that as a guarantee. Also, increases the timely payments, and all business owners can also review how they can get recovery. If, like, you as a business owner, you can use those reports if you are selling to a customer how to recover some debt. A business credit report can include consumer information also, because you as a business owner can be the guarantor for the business, and it's reported to the 3 major agencies or third party. Also, you as a business owner, if you are extending credit to your consumers, you have to report if people is paying on time, and also you are responsible for protecting that information. So it's like when you apply for credit, they're obligated to secure your information, but also if you are extended credit, you have to protect that information. If your business do not meet the qualifications to report directly to the main agencies, because you just start and then you are start as a sole proprietor and starts really small, there's other credit agencies that you can reach out locally, and those can help as a bridge or gateway for small business to report to the bigger companies, and they can obtain information. So that's how you can start also building credit. This gateway agencies can also act as a collection agencies, and they can help you to, as a small business owner, to collect if you are having trouble collecting money owed from other people. Also, these companies also help you to, if you have employees, to pre-screen your employees, and they have offer packages, services. Also, they'll help you with changes, like if they change address, contact information, and if you are going to extend credit to somebody, you can find out that if they never paid. And also they will help you to do collection services and take legal action to recover or buy the debts. To make a decision on your business loan application, lenders will likely ask for your permission to review personal credit. That's almost like 90% of the times. And they will review your personal credit. And then even they will contact your bank to verify how you are handling your checking account and your existing loans. So sometimes what they do is they send like business credit reference, but they will also check on your personal credit worthiness. So you need to build credit with your local bank in the business name. So it's super important to open your business account with your business name and separate always your personal assets from your business. Also, maintain a good relationship with your vendor and suppliers, because they're the ones that also they're going to report credit for your business. Because if you apply for a business loan, your personal credit plays a very important part on the decision of this. So before you apply for credit, it's a good idea always to check your personal credit. You have, as a consumer, the right to get your credit report once a year. And the website is www.annualcreditreport.com. So you need to ensure that all your credit is accurate, because sometimes there can be errors. So you can dispute those errors, and then you can file a claim. And you have to do it quickly. Don't try to do that when you're applying for a business loan, because that takes time. For most major credit scoring, whether you repay your loans as agreed or on time, it is very important that you pay them on time, so it will increase your personal score. That's why it's important. And then avoid any judgments or tax liens. So pay your taxes on time. The business also, because they can file a tax lien under your personal side, and any judgments. Also, if you're going to apply for a business loan, you can shop for financial services to see what it will be cheaper for you, and then to like go with the lowest interest rate. And then always keep other accounts and pay them off monthly. When you apply for a business loan, under certain circumstances, you might be required to personal guarantee the loan. So that's a very common word when you're applying for a loan, personal guarantee. So the lenders, the banks, will require to be the personal guarantor of the loan if your business is registered as an LLC, or there might be other situations, or if the loan is part of a program provided through the SBA, Small Business Administration, or if you are owner of the business 20% or more. So if you're 20% or more, you most likely are going to guarantee the loan. Obtaining the loan is super important for the business because you want to grow your business, but as a guarantor, you are liable also to repay the loan, or your business, because you own the business. And if your business is not performing well, and if you are a guarantor of the loan, you might be personally liable to pay that loan. Those risks should be reviewed carefully before you apply for the loan. And if you want, you can seek for advice from your attorney or accountant. But sometimes if you as a person on the personal side are not willing to guarantee your loan or your commercial loan, you might not be able to get the loan with the financial institution. So there's a lot of SBA programs, but with an SBA, the SBA, sometimes people get confused, and the SBA is not the one that is giving you the loan. SBA works directly with the bank, and the SBA will assume the risk involved in making the loan, and then it will help the bank provide the lending. When sometimes the bank cannot give you like a conventional loan, they can reach to SBA. But when you apply for SBA, they will also check on your personal credit worthiness. So maybe your business credit score is low because you start and you can apply for an SBA, but if your personal credit is not good, you might not be able to get an SBA. Also, if you have taxes, liens, or any judgments. So please, please be very careful with that. What are the disadvantages of being the personal guarantor? That means that you are liable for the loan if your business is not able to make the payments. And if your business is not required, like I said before, to make the payments, then you as a person will have to pay the loan for the business on behalf of the business. Sometimes they will ask you to pledge some assets as collateral if your business does not have any assets. So they might ask you to pledge your house as collateral. So if you ever pledge your house as collateral and your business does not pay the loan, and you as a person is not paying the bank on behalf of the business, it could result like in foreclosure of your house. So you need to be careful when you pledge assets when you apply for a commercial loan. Sometimes they will ask you to get another person as guarantor. And sometimes if you are married and they ask you to pledge your home, maybe your spouse will be required to sign if you are married. And if you have a partnership and all partners are equal responsible on paying those loans. So as a new business owner, your personal credit is the foundation to build the business. Having the best credit possible may have a significant time, money, and will help you to launch your business. So the advice from Benjamin Franklin as a young tradesman was, remember that credit is money. So the takeaways from here is separate your business from your personal. When you start your business, create the structure. If it's an LLC, S Corp, C Corp, get the business EIN, very important. It's like the social security for the business, and report your business to the Duns and Bradstreet report. And then here is my information. I work at the Aurora Bank and Trust branch. That's my main office. It's located at 2287 West Galena Boulevard in Aurora, next to the new Aldi. My direct line is listed on the screen with my email. If for some reason you miss this, my information, you can reach out to the chamber, Sherman, and I'll be very, very happy to help you. And if you ever need like a one-on-one session, I will help you and I can guide you on how the credit works or any other things that you might need for your business.
All righty. Well, I see that we have some questions that have come in. I had some people even texting me some questions who have not been able to be on the webinar, but also to our panel, to our attendees, feel free to type in your questions. But to see here, what is the best business structure to form? I guess it's a question on whether it's best to find sole proprietor, LLC. I guess that's what the question is.
There is no best structure. Is whatever your business needs are. And for that, I will suggest to talk to your accountant, and that your accountant can guide you. Sometimes you can start as a sole proprietor. There's nothing wrong to that. And then you can also like change structure. And it also depends if you have a lot of personal assets pledged to, or how many partners do you have? Are you the only person on your business, or you have any other ones? It depends. So always, there's no right or wrong answer on here. It depends on how many people it's involved in the business. If sometimes, like if you guys put money to start the business, so always talk to your accountant and lawyer.
Okay, another question here. Do credit bureaus review your personal credit to evaluate your credit worthiness? I think you might have covered that, but
yes.
Okay. And so, but if as I listened to you, you said you want to keep the two separate. But at times, why do banks look at both if you're going to keep them separate?
Because they will also, the banks will look at your personal, because at the end of the day, you're the owner of the business. So they will look at, as a person, how are you repaying your debt? So there's also sometimes a misconception with business owners that, like, I think I mentioned that, oh, my business has credit, but I filed for bankruptcy, or you're not paying your bills on time. So it's separate, meaning do not use your personal credit to pay your say, for example, do not use your personal credit card to pay or to purchase stuff for the business. Separate that, but they will also look at your personal credit worthiness. Like when you apply for an SBA, some of the questions are if you file for bankruptcy or if you have any judgments or lien on the personal side.
All right. Question I have is, okay, you kind of covered those who are just starting to look to get credit, but what if you are an established business? You've been in business well over between 5 and 10 years. You're looking, so at this point, you should already have or already know, but is it something for businesses to say every 3 to 5 years, or how often should they check their report just to make sure that there's no trouble there when they do go and look to expand the business?
Once a year.
Once a year. Okay. Is there in terms of doing that, say for if you're looking to go and obtain a loan to do a much bigger project, which is going to involve you needing, quite a bit of money. Is it best to have a good relationship with your bank, or you can find different sources of loans that can be able to help you? Because it used to always be, yeah, you had a good relationship with your banker, and
Yes.
then from there it could go. But you have nowadays, there's so many different areas. What's the best route to take?
It's always the most important thing is to have a good relationship with your bank and your banker, because when you apply for the loan, they know your business very well, almost same as you as an owner. So when you apply for the loan, your banker can even like respond to all the questions to the underwriters might have. So it is important always go to your bank and apply for a business loan with your bank, because they know your business very well. When you start your business, they know you. So when they're underwriting the loan, they know all the your business, so they can help with the underwriting of your business when you apply for a loan.
All right. Well, another question I have, and looks like we got a couple more questions coming in. With this whole aspect of diversity and equity, people in businesses owned by people of color have always kind of gotten the short end of the stick with regards to banking and loans. It's from what we've been hearing. What are some of the things banks are doing to improve the trustworthiness of people as they come in, that they're going to get a good fair shake with regards to coming in and applying for a loan or looking to extend credit or even getting a line of credit?
Mm-hmm. Banks are regulated with the Fair Credit Act, so they won't ever like look at the ethnicity or to either approve or not the loan. Also, what also banks have, and we have with small businesses, and if they just start, because sometimes they require you to be in business for over a year. Sometimes banks have, they can extend a small line, and we have it for 5,000. Like I say, start small. If you are between 1 day in business and less than 12 months. But there's a misconception, but no, we're regulated by the Fair Credit Act. So do not be discouraged or think that, oh, because I belong to this ethnicity or this group, I'm not gonna get approved. No.
All right, as I said, more questions coming in. When applying for credit, do you need to have a business plan to show how the credit will be used?
If you are a new business or you're gonna start your business and you are applying for a business loan, yes, you need a business plan. But if you are already an established business over 2 years, you don't need a business plan. But they will ask you, of course, for what do you need the loan. There's banks that have, say, for example, equipment loan. Well, yeah, they're gonna ask you, okay, I'm gonna buy this equipment, and they might even ask you for the invoice. They might pay that equipment on your behalf. But if you are already established business, no business plan. But if you are a new business and you're going through the SBA, yes, you need a business plan and with projections. And what are you gonna use the money? How are you gonna disburse it? Which buckets? But yeah, it depends. New business, you're going through SBA, or if you are a startup business, yes, you need a business plan. Established business over 2 years, no.
Is there, even when you, as a existing business, and you are going and looking at different avenues of growing your business, is it best to involve the SBA or other organizations like the SBA? Because, typically it used to be where SBA would, they used to have a guaranteed program where they would
Yes.
guarantee a loan
Mhm.
with a bank, good partners and so forth. Or I know years ago, they used to work with small business and allow them to defer their payments, and that was covered by, the various programs. So what other programs that you know offhand that are available to businesses to help them to, increase their line of credit, to be able to be a guarantor towards their loan and so forth?
I mean, if the bank is a preferred lender with the SBA, that increase the possibilities. If a bank cannot approve your loan as a conventional loan, they can go through SBA, and it's still there. And SBA, it's basically like it helps the bank when you don't, like a guarantor. There's also other institutions that the banks work with. If you don't get approved as a conventional loan or SBA, banks, and I can forward the information, there's other financial institutions that sometimes we as banks, we refer that business. If for some reason your business is not ready, or there's something in your credit still that you need to work on, but you need the loan, we will refer the business to these other organizations that we work with. So it used to be Axion. One of them is Axion, but I think it changed the name. I don't remember exactly the name, but I can share that information. So we, as a bank in Aurora Bank and Trust, if your business doesn't cannot get a loan or conventional SBA, we will refer you to other institutions. We're always looking ways to help.
Is it best in terms of when you're looking at the amount of a loan that you're looking at? Is it best to be able to first make sure that, let's say, if you're looking at to obtain, you've been in business 10, 15 years, you want to obtain, say, a $500,000 loan. Let's use that example. Someone comes in and want to get a $500,000 loan. What's going to be the route? What's going to be the process? What's going to get us to yes that people need to know about?
Okay, so it has to be, your personal credit needs to be good, because you're going to be, for that amount, guarantor for the loan. They're going to check your credit, of course. Your business, we're talking about an established business, good credit, that if that business, say, for example, had previous loans with other financial institutions, and it they pay on time, that they're gonna look at that. Also, for that amount, they will look 2 years of business tax returns. So meaning they're gonna check the cash flow. So you can have excellent credit on your business, personal, but if it doesn't cash flow, meaning if your business has the ability to repay that debt or that loan that you're asking for, they might not extend you the 500,000. They might only extend up to what you're gonna be able to repay.
Okay, let's see. What if you, in terms of working with vendors, you pay using cash? How can you report that, or is that a good thing or a bad thing? I'm trying to interpret this question.
It's a bad thing because it's not gonna be reported on the credit. But some vendors let you pay 30 days, and it's when you pay your invoices, 30 days, no interest. So it's better to pay so you can establish credit.
Okay. All righty.
It's like if on the personal side, you never had a credit card, because just think about like you as a person. And I seen people, no, I don't like to have debt. I pay everything in cash. But when it comes time for you to apply for a loan, you don't have credit history. You're not establishing credit history.
Is it in terms of when you attain the credit and you want to then eventually and this is a question that came up to me from one of our members last week, who's looking at a succession plan. They're getting younger, and so they're going to be looking to retire, and they want to have succession plan. Is it best to work with the ones you're going to succeed to make sure that it's being their credit, that they're part of, that you've worked them into the system so it can continue to flow? What's the best route for that?
If you have a business owner, and say, for example, they eventually leave that business to their kids, but they have the kids need to also be part of the business or owners, or be reported as owners to be able to for them to build the credit and maybe apply for the loan.
Okay, so say that, so they have to be, so in essence, you need to be involving them early on before you step out.
Exactly.
Okay. So what, a year, 2 years, really?
When you apply for like if you're gonna apply for the loan, they need to be already part of the business.
Okay. Is it, okay, here's one last question. When I'm trying to, let me interpret this. It looks like they're asking, how can I improve my credit score when I know it's low and I'm in a situation where I've got to move fast? I guess that's kind of what are some of the things that a person can do in terms of, if they know the credit score is not great and they know they're in a particular situation, what's the best route to take to improve the credit score?
There's to improve a credit, it takes time. If you're in the need of applying for a business loan, then you're gonna have to go probably through other routes. But the way to improve credit is apply for secure credit cards and credit builder loans. We have those and we offer those in Aurora Bank and Trust. But if that's something that you wanna have solved for the next month, there's no way to improve your credit because it takes 30 days. Credits it takes 30 days every month, it refreshes your credit. So to improve it, and if you know it's low, apply for a credit builder loan. And I've seen so much people getting from low or no score, with those being improved a lot.
Okay. Another question. Do you have a better chance of obtaining a loan with a smaller community bank as opposed to a larger commercial bank?
I will always recommend community banks are always more involved in the community, but my suggestion is always when you open your business account, establish a relationship with your banker, because they're the best person, your friend, that's gonna help you to get your loan. There is nothing wrong with shopping around, but always go to your bank where you have your business account, and always establish a relationship with your commercial banker.
Okay, for myself, was a person who worked in economic development, and I heard that back a while ago. It used to be where you could establish a relationship with someone because they were there for a good long time. But now at times you do have it where it is more of a revolving door of people coming in. So it's kind of makes it kind of difficult to establish those relationships because you get with someone and then after 2 years they either promoted or they're gone to another bank. So how can people get around that to establish what you're saying, establishing a relationship with a commercial lender?
But going to the bank where you have the account, they can check how your business is performing with your account. So probably like if they go and then they're, like you say, their banker was promoted and there's another person, they will check the history of your business and how, like if you go and apply for, sometimes if people comes to us and they want to apply for a loan and they don't have a banking relationship with us, we will require where they have their business accounts history, because we want to see how they're performing. So that's why it's always go to your bank where you have your business account.
Okay, all righty. Okay, I don't see any more questions in the chat. Is there anything you want to add in closing, Lorena?
No, thank you so much for having me. And if you guys need to get a hold of me or just reach out to me, I'll be happy to answer questions or help you with any of your business needs.
All right. I'm going to share the screen. That will kick you out. So again, we want to thank Lorena. She's done I hope everyone found it very informative, as we mentioned before, and that our next Business Insight Series webinar will be on Thursday, November 18th from 11 a.m. to 12:15, and the topic will be how businesses use credit. So hopefully those of you who are participating today will be able to go back if you need to listen to the first and the second, and then the third one. So we are working to the Chamber, Kauai County African American Chamber, work to provide you with good information with regards to how to grow and develop your business. And if you know someone is looking to start a business, as she mentioned, establishing and getting with a bank. Well, here's Aurora Bank and Trust, and Wintrust Community Bank, and Lorena has got great experience, and she's there, a great person to develop a business relationship to grow your business. So you saw her contact information, and you will see it on the flyer there also. So again, that's going to be the third in the series, Thursday, November 18th, how businesses use credit. I also want to bring to your attention our upcoming events, and we do have our another event that'll be coming up, and that will be our golf outing. And that's one that I hope, and I know there are those who don't golf. Got it, understand. But there is dinner, and it's going to be on Saturday, August 14th at the Orchard Valley Golf Course in Aurora. And it's going to be with registration starting at 11:30, shotgun start at 1:30. There you see our various sponsorship packages. Now there is early bird registration for golfers. And you go to our website, www.quadcountyAAchamber.org, and take advantage of the early bird registration. So if you're a golfer, come on out and participate in our golf classic, and maybe your team can win the traveling trophy that we have for those foursomes that win the trophy. And it's a great way of helping us to raise money to give scholarships to African American college students, especially during the time of COVID. So again, that is going to be coming up Saturday, August 14th at Orchard Valley Golf Course in Aurora. So again, we want to thank all of you. Hopefully that you again had the opportunity to enjoy and get good information regarding your business. And we hope again that you will join us for the next event on Thursday, November 18th. You will see information. Those of you who are chamber members, you will get your information in the mail, as well as other ways to be able to participate. So again, we hope all of you have a wonderful July 4th weekend. Stay safe. And again, thank you, Lorena, and everyone. Stay safe and have a great day.